All right. Hello, everybody. Let's see. Gonna All right. So I'm gonna just dive into it now. We're about 7 minutes in. Send out a bit of an update to everyone if anyone wants to join. Um, we can move on from here. Um, the main focus of mine this week, as was in many other weeks, is to review last week's analysis, see what we could have improved on, and also how we capitalized on it as well, and then and then go from there. So I'm gonna just quickly pull that up real quick, just to see what we got going on. Last week we came and we talked about. I'm gonna just pull this up real quick. Um, but basically, last week's analysis, and if you haven't seen that one, feel free to go back and watch that one. It's 2 hours and 20 minutes of market madness, but it's there nonetheless. We talked through a ton of data, talked about overall indexes, how those were panning out and playing. We talked about Google, right? How that is coming out and basically playing, or we're reviewing, like we talked about last week at least, right? Um, had a ton of data, talked through a bunch of notes as well from several banks and several institutions, single stock focus, as well as tons of macro data. That's kind of where we stood last week. Um, and then we also got into some sweeps, individual sweeps. We also did some math on like, and just on like how options flows ends up actually adding into the overall appreciation, right? So difference between $1 million sweep on QQQ and $1 million sweep on a smaller market cap company that has a smaller market cap. So it basically means that it's a much bigger deal to that company and to that instance, right? Similarly to how if I were to potentially go give $1,000 to somebody who's homeless, right? It would mean so much more to that homeless person than it would be if I were to give it to someone making a quarter million a year, already have a home, established XYZ, rada rada, no issues. You know what I mean? Like that's the difference between um, some of these option sweeps and their actual impact on the underlying asset as well, right? So that's something that I like to try to keep an eye on for. And and that makes a big difference as well with what gets invested, how I perceive certain data points that come in, things of that nature. So we talked a little bit about Werby, uh, Bloom, Energy, Silver as well in terms of the overall importance of it and how much attention it comes from it. We also went over SanDisk. Um, I'm still deeply invested into the memory space in the sense of like where I'm learning and getting up in where I'm learning and soaking it up data to try to understand that space a bit more as well. That's super important. And we focused a little bit more on indexes. What else? We did chart up Bloom Energy as well, BE. I think last week was very macro actually. I can't find a single stock breakdown that was like super in depth. So this week, let's try to be a little bit more micro, I guess. It's just that it's a bit difficult in the sense where like everything right now is very macro focused, simply because of the regime change that we're going under. Um, we are going under a obvious regime change in the markets where what? So basically the past it's just sometimes it's just better to just do this. One moment. Sometimes it's just better to do it on stream and just show you guys what I'm talking about. Boom, boom. Let's see. Cool, cool. All right. So I got Bitcoin up right now, but I'm also not too interested or invested in Bitcoin at the moment. I'm more so just watching it to watch it at this point. But if you get to indexes, right, and you just focus on the indexes real quick, Qs, I guess this was the trade I drew up last this week. Basically, that I'm focused on this into 630 range into end of year end. That's the setup. Um, and they're starting to break out, starting to show that capital appreciation day in and day out, right? Where we've seen pretty meaningful move from these lows of the 580s, 590s that we've seen, deep into now almost 620. So I find it to be very interesting. Just like how, if you look at the NASDAQ, early November, we peaked. We saw the downtrend of continual AI bubble talks, AI bubble, right? This all November, and now we're stepping into the 1st of December tomorrow, and it's very important that we just take take heed and also take a moment to just look at what all in all is going on in the markets and the data as well, and showing either the continuation or the breakdown of that said data, right? So so if we were to go ahead and take a look at this now and just start to see these pieces. If we start from the index point of view, we had Nasdaq breaking out as I just mentioned. We have SPY. I think they closed the month like almost green. There we go. See this super huge pin, lots of wick to the downside. Like, come on, showing that we're looking to really, either continue to break this out and finish this and keep pushing forward, similar to how this pin, right, was here. The way I like to view the candles and candlesticks in certain instances is like this is a nail, right? And you hammer in a nail into something to stop it from going further, right? So like if I had a roof and I was roofing these tiles in a way, right? And this is a nail that I'm using to roof the tile down. I'm here trying to hammer in the nail so that nothing goes through the board, through the roof tile, through the other elements underneath it that provide insulation and other bits and pieces and safety and structure, right? For the people below, so that, trees, rain, anything of the elements outdoor don't leak into my home, right? And get lower. That's just the way I kind of view these candles, with that super one long wick to the bottom and not so much of any wick on the top, if any, almost none. I feel like those are confirming bottom wicks in a way. So on the monthly chart, we got the monthlies closed really well. Actually, let's check the Qs real quick. Qs also closed. I mean, it's a bit ugly here just because I got some drawings, but still relatively well. Um, but I think the true real winner is the IWM closure that we saw. Um, if we go back to this, like beautiful bull flag setup on the weekly as well as obviously the daily. We broke out of this structure, kept pushing higher, similar to how, right? Similarly to how, so November 24th on that Monday, it looks like we, continue to flip and push out of this bull flag structure. We bottomed the Friday the 21st. Um, and that's the other cool thing too to take into note, right? Um, it looks as though roughly around the same time, Q's bottomed and pushed, and now they're looking to do a similar move, right? So if I did this and then you just drew this real quick, just so it looks just like it, right? You can see how the totality of the market is moving roughly similar. The totality, right? The velocity of them are a little bit different, how fast they're moving along but they're all moving in succession in very similar fashion. Very, very similar fashion, right? We saw this move up, new highs, end of October, early November, AI bubble, 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 whatever bubble crap. People talking bad about markets. Cool, healthy correction, in my opinion. Lots of our high beta names, high flying names, space tech, um, quantum names, all those names, they came back aggressively and they started selling off actually well before the rest of the market did. Well before that mid October, there's really when they started selling off, right? So they've actually already been kind of exhausted out. And as we look through back into these names, you can kind of start to see some of them are starting to cup upwards in a way. And that's going to be something super interesting that I want to take into account. A lot of these names are cupping upwards, and it could be a great opportunity coming soon, as these names maybe want to go on a little run here, especially in the sense where all the markets back green. If we don't have any hyper negative news coming out confirming and saying no, um, it could really be something super beneficial. So let's look at some of these names. I am still a big fan of the indexes right now. I think it's one of the cleanest ways to play this type of market structure. Last week we talked about, sorry, pardon me. Um, Last week we talked about tons of market structure, tons of rotation, right? Um, that was something super huge to take note of, right? We saw a lot of this rotation. So let me grab some more data and dump this in for us all, just so we can kind of see where this research can lead us, at least into what was going on. So basically, last week, mm, mm, one moment. Hmm, where is it? So I'm gonna go ahead and just quickly show you guys some Bank of America data, just so that we all have a POV on what's going on, with that. Oh, and I also want to talk about Intel. I have to apologize for all my Intel bulls. I think now we're finally seeing some real, like, fully encapsulating understanding of what is going on in at Intel. Sorry, in terms of like what all in all is underway, or what are we trying to do, what they're trying to do over there, like things like that. Like I think now we're finally getting a good view on it. And the actual narrative of the company itself is also coming together, where I can start to see, oh, capital appreciation can come this way, really because of, in totality, like what again is all happening over there. So I'm almost done dumping in this data right quick. We're just gonna slide and go through it and talk through it. Boom, boom. Stop that real quick. Oh, yeah, bro. Everybody's sick for real. I'm going big on indexes this week. Vibes, vibes. Exactly. Like indexes are probably the cleanest way to trade this market rotation because in all reality, everything is up and everything is moving in one singular direction. But that's also kind of something you want to take heed on because singular moving direction leads to when everybody's on consensus, it leads to easier washouts in the market. Um, because as soon as one person missteps and they switch positioning, right? Everybody wants to follow suit and try to switch positioning as well. So that's kind of where it could be hard in some cases to to try to do that. So that's why I was super passionate and focused on trying to get as close to the bottom as possible, right? Like um not necessarily trying to say, okay, I'm bottom picking, like I got the absolute bottom, I'm perfect, da 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 da. It wasn't really that. It's more so just waiting, reading the data, and then trying to understand when we're gonna shift and why we're shifting, right? That's when the overall volatility came into play when I'm reading the VIX and the VVIX and understanding that this is where we're flipping and this is where we're flipping bullet bearish, this is where we're flipping back bullish. Okay, cool. Like overall market consensus, things like that nature. And then conversely, with the data that we talked about, right? The data that we're going ahead and showing that as well. So boom. If right here, and I kind of go through some of the pieces. Like last week, I was showing. Was it last week? What was last week? 20. So some of the data that we have in here that was super cool, um, that I did also want to talk about for sure. So retail sentiment trended positively since August lows, but has declined significantly since October, right? So basically, overall um, retail in terms of you, I, everybody else that's just not a hedge fund, not a CTA, not a big money manager, Goldman Sachs tracks the sentiment overall, and it had to show like, hey, just like how well like retail is performing in a way. And they got all this data, and they basically said, hey, from August 20th into early October, they retail was up dramatically, but since October-ish, retail has been down um, as well and kind of washed away a lot of those gains, right? And this is where it gets back to the comment and the conversation that I was sharing when I said, like, yep, yep, for sure. I'll talk Gex and also Black Friday spending data, things of that nature, inflation. Yep, all, definitely. Um, so basically, so cool. Retail sentiment was beautiful, right? From August all the way into October, right? And then this is kind of where you are now able to kind of gauge those things, right? Because when you look back and you see, oh well, what assets were appreciating dramatically between August and um and and mid October. It's a lot of those high flying beta names that were heavily shorted. And because they were heavily shorted, They came to into it. They got a crazy squeeze. From that squeeze, they performed really well, and people retail performed really well, showing 30% gains, XYZ, rada rada, right? And then ultimately, when those names stopped working, retail either held the bag and rode the wave down with them, or they just started losing more money trying to find new longs, trying to, oh, this will go up, just buy the dip, buy the dip, buy the dip, it'll go long again, right? They got hit over the head. One of them being Rigetti, right? If we were to look, if we were to potentially look at that chart that we just showed you, the retail sentiment chart, and then just go and say, well, okay, they said that from August into mid October it performed well, and then now into December, November, or even, yeah, now December, it has not performed well. Look at the chart. August, Rigetti bottomed, ran up several hundred percent, 290% to be exact, to where? Mid October. Mid October, we continue to crash down. Do not be retail. I pray. The plan is, all right, is to, or really the plan should be, in a way, to get in so early, like I kind of have drawn up here, right? Because I plead Rigetti as well, but I just want to try to take a moment to distinguish the way I played Rigetti is to the way rest of retail did. I played Rigetti from these lows, from 16, $12, finding new lows, shaping up higher highs week over week, right? Into, okay, we could break out this wedge, potentially retrace, break of structure, break of highs, break into highs, take the break of highs, $20 into about $30, $25 range, and then boom, that's it. That's about all I took, right? And there's some people that went a bit further as well. Uh One moment, guys. One moment. All right. Sorry. So, um, and I don't know where the top is. No idea where the new top is, right? But the idea is you're positioned so well with duration, with good strike, with maybe equity as opposed to options in some cases, that you can just sit through it. You've reduced your risk throughout the entire scenario, and you can just ride it out. And my original PT was 25, 27 ish. And because I had an extra 2 weeks on my contract, I left a few on there, and then the few flew into 30 something, 38. And that by that point, it's a 600% trade. And it's like, oh, cool, out of there. I held the position for about 3 weeks ish. After that, I'm out because you have no idea. You have no clue where the top is. Nobody does. Not a single soul. So the whole point of it is to manage your risk well enough that you can go through the entire thing and just sit there with no qualms, no stress, and just vibe, right? So similarly with, again, the whole point, I'm not going to beat the horse, whatever they call it, but the whole idea was that is that that chart was showing like, hey, retail did well from August to mid October, but as soon as we started going down, they kept on trying to buy the dip, and the dip kept on dipping, and they weren't ready for that, right? So um, that was that one. Um, Goldman talked more about a little bit more about AI application, more so the focus on 2026 is going to be a little bit less from the hyperscalers, right? I would generally agree with this as well. I do think the hyperscalers will continue to perform well, yes, because they're the hyperscalers, right? And then also some of them, in the case of Google, in the case of Microsoft with Copilot and Google with Gemini and other bits and pieces, they already have application layer AI out and available and ready for use. So um, so basically, what that tells me is that those revenues are going to start coming in, and those revenues are going to be seen and breakthroughs and partnerships XYZ. But here are some other themes that Goldman is saying that will potentially be able to show some growth in the upcoming year. So we got banks, insurance companies, retailers, warehousing jobs, right? Like think of Melly, think of SE, um, those names. And then the transportation logistics sector, helping out with that, check calls, invoicing, quote generation, XYZ. Healthcare services, we've already seen it with Tempest AI, as well as Oscar in a way as well. And the restaurant industry, I do believe will benefit from this a little bit more on the cost of goods side, like in terms of like labor savings as well. I think that will be key in terms of where the restaurant industry can potentially benefit from. It just really depends on that industry as well, um, just like how well they are really like positioned and so on. So those are some of the pieces. So uh, early Thanksgiving, we saw a ton of, and they've been taking orders of AI for a while now. Yep. Early adoption, exactly. Lots of room to grow for other chains. And another cool thing too is we have some other chains like Sweetgreen that are using robotics as well. And I think that is the other angle as to where restaurants really win in AI. The use of robotics to systematically cut open avocados and prep them, deseed the avocados and give out tons and tons and tons of avocados that they're doing. Like those systematic process. Like basically, this could be their TPU in a way, right? I believe last week I kind of broke down the differential, the things this same like synonym is running in my head when it comes to TPU. It's like, okay, there's this one drill on the assembly line. That's all that job is to do is to drill that one hole perfectly. One, you know what I mean? And the use of robotics and the application of AI within those robotics could be could lead to these systematic um, robots and processes that do this one thing that's a very labor intensive action and turn it into something that is done really well. And that instance could be boom, cutting avocado, de-seed the avocado, boom, out, sweet green. Everybody in the moment that needs avocados, boom, now you guys are ready to go. And you know what I mean? And you've saved hours and hours and hours on labor to be able to do so. So yeah. So one moment. All right. Sorry. So that's something that's going to be super huge. And that Black Friday question, and talk about that as well. Black Friday, I think I wrote about it a little bit, shared it. And there's some of the Deutsche Bank Gold stuff. I will talk about that in a minute. But I think we saw Black Friday. Where the heck was it? Maybe I just wrote it out then, I guess, instead of it being an image. But it looks like a lot of the Black Friday data that did come in is going to be super, super huge to the upside. Um, where? Let me see. Cool. Yeah. So yesterday we talked about said US, yeah, US online Black Friday sales reached 11.8 billion, up 9% on last year. According to Adobe Analytics. Honestly, I don't really know what Adobe has to know about online Black Friday sales, like how they're actually able to get a figure off of it. Like that I find to be really interesting. Maybe they just meant like, yeah, I don't know. I don't think people, maybe people were just buying um Adobe stuff right now. Um and that potentially played into the figure, but there's no way that they just know that number off of like just Adobe numbers. So that's kind of hilarious because we talked about like how do they know the numbers that they know several times. Um, and that's just really one of the pretty interesting points there. Salesforce reported 18 billion total spending, luxury apparel, accessories amongst top sellers. This kind of leads into the K-shaped economy, right? There's this phrase they're all around Wall Street right now about K-shaped economy. Essentially just saying like if you look at the letter K, right? Um, is this one pillar here, and then there's this people, and then there's this people. So rich getting richer, poor getting poorer, and that's a K. That's essentially how like it's explained. They just say they just like it's actually so difficult sometimes to just listen to what people are trying to say, and they're like people in the markets and the understanding and like sometimes I mean shoot maybe I even fall in that case as well sometimes but things I'm saying and things like that like maybe it's not as exacting or what else the not it's not exacting in some cases but I'll try my best to at least define or give analogies when I go through and talk about certain things. So yes, the K-shaped economy um, is clearly a part of the reasoning here with that. And then MasterCard, see, this is a bullet point that I wanted to really focus on. MasterCard retail sales, excluding autos, were up 4.1% um, on Black Friday compared. US retails up 4.1, right? Compared to e-commerce up 10.4 compared to last year. The thing I thought about as well, like how much of that increase is just inflation? You know what I mean? Like, and I'm sitting here looking at this gold gift right now. Like, how much of that is just inflation? You know? So, like, maybe I could find the Fred. Um, Let me find you guys this real quick. This is the Fred. This is basically the measure of, let me just regular, like total CPI, all of it, right? Just whatever. Keep it easy. It shows from on a monthly frequency, 3.14 3.14871 or 851, right? Um, or 31485 to now 324. That's essentially a 2.9 to 3% increase. So, I mean, I guess like just back of the napkin um, math real quick. We could just talk about probably just say like um, hey, welcome in, guys. Yeah, what's up? What's up? Welcome in. Hymns. You want to talk about hymns? You want to talk about lucid? Okay. All right. Let's go. Lock in. Cool. We're here. So yeah. So inflation 2.9%, roughly 3% on the year. So a good portion of it is at least um, a part of inflation, but um, that's super interesting, and that also goes to show like I was thinking like, is this a good thing that Black Friday sales are up? You know what I mean? Like, I would definitely want to look back into it to try and compare. I just have to try and look to see where I get that data from. Um, Actually, either that or maybe even Bank of America, maybe, or Goldman or one of these other firms, maybe putting together that report right now, like right now, just looking through data and being able to come back and say, okay, that's a figure and what that means. So so if you get back this piece right here, gold in the central bank buying, gold, um, metals, metals as a whole, talking platinum, talking gold, talking silver. Um, excuse me. They've all done really, really, really well this year off the macro theme of debasement, right? Inflation, and we just talked about all that. And people looking for other areas to park their money. True safe haven type of scenario. And then as of recent highs, things got a little frothy, right? And I didn't quite like that personally. So I closed out some of my gold positions and silver positions uh month change ago at this point. Like but I did recently reopen them over the past like 2 weeks. So um that was one of my biggest concerns, right? That October to end of October, right? That biggest concern was that all of society became a part of the gold trade. And similar to how Rigetti and those other quantum names were going nuts and stupid, like everybody trying to buy, like, oh yeah, this one's gotta go, this is going on, it's going up, this one's going up, right? Um it I knew that it would have a good move, right? A great move, as you've seen here. A great move that I was able to take advantage of from like 320 into like 380. But what happened that I was concerned with was that we started seeing reports of like people lined up for China, people doing this, and I was like, well, I don't know if those lines they say that they're for buying more gold. Like, oh, it's going up, it's going to broke 4,000, it broke 4,001 an ounce, right? Da, da, da. Um, I wasn't sure if those people were in line to buy more gold or to redeem their gold already. It says that they were there to redeem to buy more gold, but you just never know, right? And then also, this trade became very overcrowded. Retail started talking about it as if it was Rigetti, as if it was Beyond Meat. You know what I mean? And once that starts to go into it, I know that gold, as a what multi-trillion dollar asset, what's gold market cap? The gold market cap is 30 trillion, right? Similarly to how we talked about last week, we said, hey, $1 million, like or earlier, just on this stream, $1,000 to a homeless person will mean a lot more than if we go gave it to a millionaire, right? Meaning, when those sweeps come in, when those buys come in on a smaller cap name like a Hims or like a Lucid potentially, those buys mean something to the stock. It will move the stock. when these people come in with buys, and this is retail, not central banks with multiple hundreds of billions. This is retail with thousands and thousands, just a few thousand. They're not gonna move the name the way that they want to, and that satiated that appetite that they have for these crazy returns, and they're seeing gold outperform everything else, and oh my gosh, gold this, gold that, and then they look at their returns on gold and they're only up 12%. They're gonna be like, "What? I don't want this. Let me find the next. Let me find the next. Let me find the next quantum name that's gonna jump 200% in a week, and you know what I mean. So I knew that they were gonna come into this and paper hand the out of it. They were gonna paper hand it. They're into gold because it's outperformed Bitcoin. Gold outperformed the S&P this year. Oh, let me get in the gold. Yeah, okay. Pull up. To do what? To hold it for a day or a half and then sell it? Y'all gonna paper hand this move. Y'all don't want this. Y'all don't deserve this move. For real. So, and that's exactly what it did. Pay retail piled in, strengthened numbers. I get it. They brought their billions of dollars in total capital, but individually they looked at it and saw that they were only up 20%, and they said, "What? I don't. What is a 1.24% move on the day? What is that? I don't want that. What happened to my 8%? What happened to my 10 on the day? I'm trying to buy this bit and sell this next week. You know what I mean? Like they weren't gonna appreciate it. So I knew that retail needed to be flushed out. Now that retail's flushed out, as you can see here, we've made a great move. We created higher highs, and we're probably gonna get back to it. Now, whether retail decides to come back in, I don't know. Probably, but I like the fact that we had this constructive flush. We hit 400 on the GLDS ETF, and we were able to come back and relax. So I'm a fan of that. And this constructive, this looks really well. Similarly to silver, silver super well, right? And bimetallism as a whole has come into play, and it looks like silver is going to, or it shows as well too. Silver is outperforming gold now, right? Maybe the retail found silver is actually a much smaller market cap and something you can probably push a little bit easier. So um, maybe we need to actually kind of focus in on that one a little bit more. So I'm long silver, as you can see here, with this positioning, these price targets, um, and this is where I'd like to see go on. We have markets open in a bit here, like next 45 minutes or so, since it's 5:15 on East Standard Time. But yeah, so that's pretty much what we've seen. Um, we've also seen we've also seen the. Let's go back to this real quick. Also seen a continuation of buying, right? Huge continuation of buying. Um, Honestly, as you can see, these are central banks. These are not standard banks. These are not the Chase and such regular banks. These are central banks, meaning countries, Turkey, China, India, like countries with multiple trillions putting purchasing on power into the gates, right? So this chart says enough. Next. We can kind of get into some individual names here as well, just to kind of get into it. I think, oh, I saw Reddit. I really liked Reddit. Sorry. Wow. I really liked Reddit. Reddit has been really constructive as a company. 41 billion market cap at 216 here. Um, we've kind of peaked, wedged down. It wasn't really a part of the recent like pullback too much. I mean, it did drop in asset price, but it wasn't necessarily like along the same timeline, if you know what I mean. So I wouldn't really group it together in that case, but I do really like Reddit here. Similar setup, downward facing bull flag, a little pennant action going on with a huge breakout out of the pennant after good grouping and price confirmation from the market. Showing this breakout, I like to see continuation from this breakout, and maybe we see something like IWM, right? Something like that, potentially, right? So that's one. Reddit could very easily step into the 240 range, I believe. So the way I'd play this one is a little bit. I don't know if I actually will or not, but we'll see. So let's set it up like I am, right? Cool. Drop that one there. I'll drop this one here. 245 seems important. So put that to the PT. 245 there. Maybe if we break above this like nice little grouping here, we got a candle, we rejected. So maybe the break of 220 is what I need to focus on for the entry points. So entries, I believe, are the break of 220. Set an alert. Um, just so we can be alert of what that is. Um, how that looks. Maybe tomorrow we break that 220. As long as we see good buying volume, maybe I could see a few sweeps along the way. That would be great as well. Let's see if there are any gaps. There's no real gaps here to be filled. So it's pretty good structure because we already filled this one over here. So put that there, put this one here, put this one at 230 as the second price target. Keep it round numbers, keep it easy. You don't have to think because like listen, doing math once is already hard. I'm not here to do math every single position. Because then you're already worried about emotions. You're up 20%, you're up 180%. Next thing you know, you blinked, you didn't do the math right. Oh, if I said, oh, okay, cool. Next thing you know, your 180% gain looks like 140. And mind you, that's still a great gain at 140. But let's be real here. We want to get the most out of every move. So if you're already at 180, like why are we sitting here lollygagging trying to do math in the middle of a position? No, know exactly when you want to sell and exactly when you want to get out beforehand. Don't stay here trying to do that in the meantime. You're gonna be caught up. Because look, what's gonna happen when your alert go off and you in the grocery store? Huh? I mean, you probably shouldn't be in the grocery store, but I mean, sometimes you gotta be in the grocery store from 9:30 to 4 p.m. on Monday through Friday. So it's the case. Sometimes you got a meeting to go hop into. Come on, we all know what we're going through. We can't sit. We're not can't just sit in front of the markets and just live it every day and like, be. You know what I mean? So let's just be real with it sometimes as well. Set yourself up for success, not failure. Prepare for it. So 208 below this structure as well, right? We've seen it getting rejected and come back. We've seen it, get rejected, come down. Like so, I think this 208 managed risk here line is great with a break of 220, you 10 points higher, another maybe another 15 points higher as well, and that should be good. I'm usually a three target person, but I mean, I guess the ambitious one we could probably put at two. Eh, I don't know. 255. Ooh, got you, got you, got you, got you, got you. My fault. My fault. Broke down to Reddit this whole time and didn't even share it. Sorry. Okay. So back into it. Basically, I was just like, hey, I'm liking Reddit. We're showing some pretty good pennant action, right? Higher highs, higher positioning as well. We're coming back. We're pushing up, and then now it's just this past week we pushed out and broke out. It looks good. I put a neutral positioning, like no position until we break above the 220 and have good strength and good volume to follow through. I'd also want to look to see if there's any sweeps that come in to show the confirmation of this. Maybe somebody sweeping January 240 calls, that type of energy. That would definitely play along to our positioning. Managed risk here could be 208. Honestly, I should probably put it to 210. But I mean, my manager's Caroline is not a hard stop, but it's something to keep in mind. So 210, break into 220, could probably trail the manager's care, put it to 215, something like that. Then by that point, your risk is basically nothing, if not a little bit of a loss, like not too bad. But I'll leave for now. I'll keep the manager's Caroline 210. or maybe 212. I don't know, right? This is kind of where I get a little arbitrary sometimes. Just kind of look to see where. That's also kind of why I don't do hard stop losses, because prices come down just to go back up a lot of times because people are market making, people pushing it higher. So I do really like um, that actual access as well. So yeah, that's Reddit. One of the names I'm looking into, something super interesting that I want to keep an eye out for. So I set my alert, the 220 neutral zone, price target 230, right? 245, and then 255, something like that would be nice to see happen, and hopefully it can move similarly to how IWM has moved, um, with it being a part of like that smaller cap companies in range as well. So that is something super interesting that I'm keeping my eye out for. Um, got it, bet. So um, another piece that I was super interested in too, Intel. So I recently came across this message um, from an analyst out in Taiwan who put together something pretty cool that I figured is important to even just read and look at. But he basically went on to say, and this is all speculation. This is kind of where my speculation hat comes into play, right? Like I'm not necessarily um, saying that this is the gospel or this is the truth, but it is something that I am interested in nonetheless. Um, hmm, this report right here. Report says Intel is expected to begin shipping its lowest end M processors as early as 2027. Apple and Apple, well, not just, but like Apple just dusted Intel to do TSMC to develop the M chips. Like when they transitioned over from having their computers use the i5 processing and like the generation of like Silver Lake processors and all that stuff, right? When they had that whole other architecture swap, and then we switched to the M's, and then now the computers got super cheap because these computers got really efficient as well, and like all this stuff, right? And he's saying um, that the basically a lot of it is that Apple signed the NDA with Intel to be able to get this advanced node, I guess. I'm not super technical, as I say sometimes as well, so I just try to follow suit with what makes sense, really. Um, and says in his latest or their latest industry surveys, however, indicate that visibility on Intel becoming an advanced node supplier to Apple has recently improved significantly, right? So that's something also super interesting. Um, Apple's lowest MR processors currently used in the Air and the iPad Pro mainly, with combined shipments of roughly 20 million units for 2025. As MacBook Air shipments 2026 may be impacted by a new, more affordable MacBook model using an iPhone class processor. Shipments on the lowest end processors for 2026-27 are totaled to be about 15 to 20 million units. So what that tells me is that it seems like Intel's coming in with a cheaper price point potentially, because maybe they are able to provide a better price break as well as this advanced node to Apple to then make Apple be intrigued to say, oh, well, they have a better price break, meaning, you know, because a lot of times when you get as a company supplying these things, you get better pricing with the higher units that you buy, right? So with them decreasing these units because of just how overall like the refresh cycle has degraded dramatically on Apple products because of this better processor. Now, maybe Intel, who is fighting for scraps and trying to stay alive, as you can tell, may be able to come through with a heavily subsidized, better pricing break, better overall position than to TSMC. Although TSMC has said, I guess they're saying there's no material impact on TSMC's fundamentals or fundamental or technological leadership over the last several years. So it's not necessarily an issue with TSMC's ability to produce it. It just seems as though there's a few other factors that are coming into case here where Intel is fighting for relevance and sorry, right? They're fighting for relevance. Um, Second, they have this advanced node that apparently is something that Apple wants. Um, and then third, the other angle, which I talked deeply about in my one of my WAP videos heading into Q4, right, of this year, was that make sure you pay attention to this made in USA policy. That whole Trump angle of the administrating the administration showing so much love to made in America, that is important. Because listen, even if these plays do not pan out to being fully made in America, because we don't have the infrastructure class to actually do a lot of these projects at scale yet, it may pan out over time, but that also doesn't mean that we are even in that trade for the pan out over time. We're probably in the trade for the perception of the shift of it panning out over time. Ready? I'm gonna say that again. We may not be in this trade for multiple years for this to actually pan out the same way how I was long MP before the government went ahead and invested heavily into it. The same way how I was focusing on lithium, yeah, like LIT pre-COVID, and that became a really huge factor as well. Um, and recently, where we've seen from these rare earth minerals as a whole back and forth trade negotiation with China because they overall like run run it right. And the importance of these things the same way how they focused Apple to say to do their glass work from Corning now. I think they have that. And then they also forced Micron. Well, Micron was already kind of in the United States. I think they're based out of Virginia as well, but they're they're imploring businesses to do things here, right? TSMC does have a live factory now, a silicon factory here now in Arizona, but Intel is US based, and guess what? The United States of America owns a fat equity piece in that as well. So it just makes sense to keep it all in America, right? So there is a bit of guessing and potentiality in a way looking in this case, right? And even if it doesn't pan out, the perception of it panning out has has a higher probability of occurring even if it doesn't pan out. The perception, what does that mean? The markets may react to it really, really well, right? So if we go and take a look at it since the break of this, what was that? And by the time this is mainstream news, the upsides may have already exactly. Exactly. By the time it ends up being mainstream, oh, Intel's back. Wow, who would have thought their foundry found some orders? Rah, rah, rah. We already missed the whole boat. And not to say that, Intel hasn't already appreciated well. I took a smaller position on this in the break of, I think, the break of 25 here, like this range, this range, this range into the 30s. And that was it. I was just like, I don't really know where we go above this. But now that we broke out the doghouse, we've come back, we've retraced, and we saw this great volume, great price movement in just Friday on it being a weak day on top of that. Mind you, Friday was weak. Like it was thin trading. Everybody was still on vacation, right? Like if we continue to see this break and push above 42 week, I mean, overall perception on this is very bullish right now. This all goes into the whole buy the rumor, sell the news. The rumor of the fact that this asset that we have is connected to the US government, backed by the US government, backed now by potentiality a better node, better working class node that can have that Intel can potentially offer with great pricing power to Apple. Apple can then probably even reduce prices even lower for the next gen models. What does that do? Probably somehow allow us to sell from 27 from sorry 15 to 20 million units into 10 to 15% increments on that. And who knows what those margins are going to be because we don't know what Intel's going to price those nodes at to Apple, right? So Intel's going to provide value to Apple. Apple's going to turn that around, make more cash on that, give it back to shareholders, and we're just going to sit here and profit, right? Because that's what we do. Ultimately, the perception on Intel has shifted, and I have to say, it's starting to make sense. The story is starting to make sense. So if I were to draw this one up a little bit as well, I like the break of this 42, maybe 42 fifth, 40. Let's keep it 42. I'd rather be a little bit earlier, whatever. Um, I put that as the neutral zone. Manage risk here is going to be a bit difficult because there's a lot of risk right here. 20% plus. We're gonna have to keep it tight. We're gonna have to keep it tight. So I'll probably go $2 lower. Is that enough? Like, what is that actually? 38. Yeah, I could probably weather that storm. 8% ish. Yeah, 8, 9%. Yeah, I could probably weather the 8%. You could probably weather it. All right. Or maybe 25. Something like that. So I start to evaluate it a little bit earlier. Like the break of this structure right here, the piton that we see right there, that kind of thing. All right. Um, and then after 42, I mean, shoot, where do we get busy at? Like, oh, look at this one. Yeah, this one over here. We get wiki, wiki. Same over here. So it looks like 45, maybe something. Um, 45 might be something. And then probably up here at this one as well. 50, 50 ball. Put that one right there. That looks something kind of important. Or 50-50 maybe. Actually, no. I'd rather lock in 50 cents earlier. Whatever. I'm not here trying to take on extra risk. And just trail your managers care line up. We break 42, we push into 42.4, 42 whatever, 43.1, whatever. Boom. Trail this, put it back to flat. Boom. Trail it, put it back to flat. Like, trail it, guys. Manage your risk. 38.25. Put that back there. And then that's probably how I may want to play it. How much importance do you put on PE and forward PE when looking at downside risk? Okay. Um, I would put a lot of importance on it for long-term holds. This to me is probably a trade that will not even go through a full earning cycle to be able to get updated PEs and price to earnings, price to equity ratios and so on to get updated. So I'm not necessarily looking much into fundamentals too heavy like PE ratios and so on, unless it's like a long-term investment. Like I'm looking to hold this for the next year year plus, right? Then that way you get to start to look into earnings, and you get to look into, the price, the cash that comes back on these earnings, um, and things like that. Because the finicky part is you think about names like Palantir, you know what I mean? And it's a quote unquote great company, right? But is it worth, like, what are they trading at? Like, I think like 200 times earnings right now. Like, that makes it so impossible to buy companies in a way, or to even trade companies on that. And I feel like it's not fundamental to the effect of a trade, where I may only hold this for like 3 weeks, 4.5 weeks, maybe a month plus. Um, yeah. So I'm still trying to find my time zone in a way, and still, you know, extract as much value as possible from these moves, right? Because if I'm sitting in a contract that expires mid-January, and yeah, if I'm looking at a contract that expires mid-January and this 10% move happens right now, I'm making less money, less percent gain on my mid-January contracts than I would if I just bought the mid-December contracts. And same thing in other ways. If I'm sitting in the March contracts looking to hold this for a longer time, right? I may not be able to capitalize on these shorter term moves as much or as fluid because of that. So, yeah. So that one, let's take a look at, I know somebody came and mentioned Lucid. Mm, yeah, I don't know. I think it's hard to buy these names, honestly. Right? Like, we just sat here and talked about one or two or three things that made it bullish for Intel for the short term time period. Um, Reddit as well, right? Like, technical setup looks beautiful. The company is still strong, beat earnings over the head, right? Sentiment is still there positively. Um, and that, as well as Reddit's case into how they play into ads and the ad space, like, it's just a very bullish overall. Like, it's just hard for me to get bullish potentially on Lucid when the chart continues to do this. Like, I tried, as you can see here, I tried. Like, okay, maybe we, form a bottom and we start to push higher. Like, it would have to look something like this. Maybe something like that for me to get bullish on Lucid. But it's just hard for me to get interested in this, especially when there's so much other juicy ideas out right now, right? Like you're trying, like, gold, like all these other names, just way more appetizing. I ain't trying to eat no chicken when I got lobster around the corner. Like, that's how I'm feeling about some of these names. Cool. Yep. All right. And then we also got hymns. Hymns was also mentioned. I do like hymns. I've traded hymns earlier this year. It was beautiful. Um, it's just so explosive. Like, look at this range, bro. This range is insane. It's like it trades insane. It's not really my forte as well in terms of understanding pharma companies, but it's also a recurring revenue model kind of company. Um, and to be honest, I mean, it doesn't look bad, but it's just so rangy. I mean, at this point, I would say this is probably the best price to buy it at in recent times, right? Like, range high, range low. High, huge resistances I have listed out here at 65. I was looking to see something happen here. That didn't this path didn't hang price out as well. Manager's here, blew straight through it. Like, forget you, Kyle. Like, you know what I mean? Like, I should probably go ahead and just delete the rest of these because this trade did not work out at all. Um, but the range is just so wide. But I mean, when you think of it, if you were to pivot, maybe look at it on this scale and come through with like a diagonal setup, this could be something. You know what I mean? This could be a cool bottom that pushes up higher. I want to see flow in this name to help it out though. And maybe we could take it from the 40 into this 65 resistance range, 60. Um, but to trade this, will have to be tight stops, right? So I'd say 36 is the MRH line. Could take it up to 40, 44, I guess. Something like that. Y'all seeing this, right? Yep. Take it. Probably take this to, let's just take it to 50. And then at this point, if you're in from 36 and you took it all the way to 50 already, just let it ride. Get back in your bag. Take it to the huge distance. Take it to the 65 for the third PT. You know what I mean? Just chill, you manage risk, trail it, trail it, trail it, trail it, push it up, push it up. But I mean, maybe it does do this. Maybe it does a little, you know what I mean? Little boom, 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 little lower low, come back to test the trend line. Then we go crazy, blow straight through PT2 or something like that. Maybe come back to it again and then do something like that. Actually, this looks kind of fire, you know? Maybe this is something like this. Push back into 65. But great news has to come out. Shitty earnings can't be the way to do it. Something got to change sentiment, right? Like maybe they could sell GLP again. I don't know. Maybe they come out with a new model of some drug or whatever, some cheap pharma drug. They partner with some company somewhere. Oh crap, my computer's about to die. Ah, okay. But yeah, that's Hims for you. Um, let's see. Maybe we can. Oh, appreciate that, caller. Appreciate that, bro. Appreciate it, man. Thank you, thank you. Um, so yeah, so some of these pieces are super interesting. I'm heading into the week. Most of you guys know my positions. I'm long silver. Um, I'm still hyper metals. Let's take a look. Actually, no, let's take a look at metals real quick. I mean, add some more data real quick. Let's see what we got. Let's see what kind of data do we got, and then I'm probably gonna wrap it up because I don't have my laptop charger with me. So hopefully you guys enjoyed this one overall, but let's get into it. So Nasdaq's pushing the SEC to approve tokenized stock trading. All right, interesting, cool. SEC approval. They're trying to push that. Something to keep in mind. Circle, Coinbase, crypto as a whole could get a really huge push on this if this catches any storm. This catches any bid, and you start to hear somebody filed this, somebody pushed that, you could definitely see some of these names start to form. And in other cases, you may want to be on the other end when you start to see the names start to move and no news has come out confirming this. Pay attention because that probably means some insider somewhere is waiting for this news to come out. Market will probably push at that point. Um, so Circle CRCL, Coinbase COIN, things of that nature. But yeah, so Bank of America gave out some of these hedge fund reports just to see where outflows, inflows were. Oh, this is another one that was super important that I want to talk about. Tech outflows. I believe this report's from Goldman or maybe Morgan Stanley, but this was the rolling 4 week average of net buying, right, versus selling of tech stocks for their clients in multiple millions. We are currently at a multi-year low, a multi-year low that we have not seen since hyperinflation, since the balloon came out of hyperinflation in 2021. So since the air came out of the balloon of the hyperinflation cycle, post COVID, post stimulus, rada rada rada, where we sat in super high inflation and the market didn't really do much 2022 in totality. It was actually a really red year. And we just narrowly escaped the definition of a recession. And if you ask me, I think they manipulated the whole recession call there. We we just beat. So the technical definition of recession is two declining quarters of GDP, gross domestic product. So that 2022 year of that um, was basically that, and we saw huge decrease across the board, across everything, right? And we are currently right now in a market that is similar to that with the tech outflows that we've seen. um, I think personally it looks beautiful for the mere fact that it's staying as hot as as it potentially would be is not healthy, it's not constructive, it's not conducive for the markets for us to continue to run, for us to continue to make new highs, to push into higher highs. Like it's not good. It's simply that, right? Similar to how in gold, how I mentioned just a few like minutes ago, like when retail came into gold and they just kept on pushing it and kept on pushing it higher, I was not a fan of that because ultimately, when retail decides to leave or they're not, appetized in a way, the air will come out of the balloon. The tide will recede, and you will find the individuals with no pants on, right? People that are leveraged to the moon and can't position, right? That goes exactly back to the other chart that I was showing you guys earlier of retail and how right? How retail was ready to go. Like as soon as leverage is on our side and it's moving the right direction, generally, it'll work until the tide comes out. And then at that point, it's really hard to protect it. You try to buy the dip, it doesn't work. The dip doesn't work. Dips keeps dipping, all that. So it's good for you overall in the market in this case. Oh, another thing too, I want to connect the dots for real quick. When I was talking about Intel and being bullish, this also was interesting to me. This order right here, this top section, Intel's order, somebody piled in 6,963 contracts on the Intel December 25th or December 5th of 2025 contracts for 38.5 calls at $84 a strike, putting in half a million. They're bought deep in the money. With the open interest is pretty high at 30,100 and pretty good volume as well, right? They bought a little bit of duration into next week or this week coming up, this experience like coming up, which kind of tells me a few things, right? So this is how I'm deciphering that. They put or a little bit more than half a million into this position. They bought slightly cheaper than where the market was, or actually maybe they bought right at market. Let me see. Sorry. Uh, they purchased it. Yeah, they bought the 38.5 calls when Intel was at 37.92. So what does that tell me? That tells me that the person is not necessarily interested in buying the shares or exercising these calls. Because if they just wanted to, right? They bought 6,000 contracts to buy, what is that, 60,000, 69,000 shares, something like that, of Intel at 38.5 by the end of the week. They could have just bought it a dollar or 6 cents less at the time that they exercised this purchase position. So I don't think that they're too keen or too interested in trying to get that equity or exercise that equity. I think they're interested in a short term upside, and they figured just some slightly out of the money calls will be able to get it done for them. So they're probably looking to just ride this out, and it looks like they want some short term momentum. And to be honest, maybe an announcement maybe comes into play shortly as well. Um, so yeah. So here's some other options as well. ERO showing another good buys, and Netflix as well also showed some good buys. They have some duration on these calls. I like these a little bit more because they have more duration. It's not as much premium that went into them ultimately, but um, I mean these are good buys, right? I don't even know what ERO is, but maybe I should take a look at that, right? Um, let's see if I could take a look at it. ERO. Well, I mean, it's a great technical setup. It's a minerals and metals company. Yeah. All right. One sec. All right. One moment here. Cool. You're good. Um, so it's a minerals, and ERO is a minerals and metals company, right? So actually, this fuels our trade that we're talking about silver and gold and platinum and those bits and pieces, because they're interested in the copper metal as well. So copper, yeah. So they sell copper, gold, and silver products. It's a mineral company that does exploration and engages in development in Brazil, and it's headquartered in Vancouver. So once you start to see the ancillary products that are adjacent to these thesis, the thesis, and the overall movement, you get to start to piece things together for that movement, right? So if they look at ERO here, oh, I guess you kind of can't because I guess whatever. Come up here. It says that ERO is a copper mining company, but this setup is actually textbook setup. This is what I call my torch theory, right? Where you go on a super long bull run, you come down to you make a basin in a way, right? You come down to cup out of this basin, and then you want to break the highs. You want to break the highs. I mean, you break the highs, you could probably come up, break the highs, come back, retest the highs, and then continue to run and get back on price path, and keep running. So yeah, actually, this looks great. It's a great trade as well. This is opportunity as well. So I think they bought the 30 strike. That contract was saying January 2026. So they bought the monthly 30 strike. They put 80 grand on there, and then they came back with some repeat activity as well. That's what the indicator shows here. Um, some repeat activity. Um, so that was great overall in terms of price movement. People are pushing into that, right? So all right, let's see who's buyers, who's sellers. Hedge funds clients were the biggest net buyers last week. Retail clients were the biggest net sellers. So um, looks like smart money is moving into buying, and that's why we saw such a huge move up over the past few weeks over S&P, triple Qs, IWM, right? And retail's coming in and licking their wounds and finally saying, all right, well, I'm going to probably exit here some of these positions after feeling max pain, and basically selling at the bottom to who? To hedge funds, to institutions. I don't make the game. I just play it.